Hello, everybody. Welcome to the Plus Three Futures and Commodities Show. My name is Ben Maldonado, and I'm here with my partner, Barry Hederachi. We are recording on Friday, the 4th of April, about an hour after the market closed, and everybody's exhausted, I'm sure, from a hell of a week. We're going to call this the halftime show because, believe it or not, and we'll talk about why, bigger picture, we're probably about or if not, if even not there, about halfway done with this bear market. Anyway, Barry, where are you? How you feeling?
Feeling like I could use the weekend. That's what I'm feeling
Yeah,
like.
I mean, it's a lot of focus when you get these massive bars and this massive volatility.
Yeah, man, it takes a lot more focus and that drains you after a while, right? You're used to a certain kind of rhythm and all of a sudden the tempo changes. So yeah, everything is good, but also you have to, when you get 15.4 minute bars, 5 minute bars, it's another level of attention.
Absolutely.
Yeah,
And
yeah.
there's the S&P. So let's take a look and let's dive in.
Yeah, let's take a look. Now, if you guys have been following at least since December, then you kind of know the path we've taken and what we've anticipated. And if you're new, I would suggest that you go back and check some of those tapes, maybe from December, right around when the high came in, or even a couple of weeks before the high came in, because we were looking for these big cycle highs to come in. They were monthly bars, and also when the eventual high came in, the false break high came in February. Those are also good tapes to watch because while everybody else was looking for new highs and continuations, and we were a little bit more cautious, right?
I mean, it's not just new highs. People were saying, oh, we're melting up. We're going to 6,500, 7,000.
Yeah,
So when we were saying, you know, be
no,
careful.
yeah, we knew better
It,
because we saw the monthly, weekly cycles come in, and
yeah,
they're
yeah,
huge. And at the time, we talked about how you know one of these little, tiny little 3 day corrections are not going to actually balance out some of these big weekly, monthly cycles that came in. And this is kind of what it looks like when they're, when they have traction. And we also covered the tech stocks a while back, and we looked at some of the Mag 7, some of the, Palantir and some of these. And we saw how the common theme, I think that's what we called the entire show that week. Common theme was how they were also topping out, right? We were seeing these big distribution patterns. And we were seeing how they also had monthly, weekly cycles coming in at their highs. So it looked like it was all pretty much said and done
I
by the
think you're
time we,
absolutely, Barry,
yeah.
that's a great point, and I'd totally forgotten about that show. Do
Hmm.
yourself a favor, go back, listen to that show. It was a midweek show, so it's a shorter show, half an hour, 40 minutes max. And the overall theme was all of these different tech stocks that were leaders of the bull market. I mean, led on the way up, were hitting weekly, monthly major cycles. And
Yes.
it was a big time red flag.
Yeah. And it all kind of came together, right? The leading stocks, we had the Nasdaq, you watch that look at that every week, the S&P, the Dow, they were all adding up slowly one by one by one. And then by the time the high came in, well, okay, there it is. That being said, now what? Which is our weekly question.
That is
Um,
right.
yes. So coming back, getting into this leg, after we got the first leg in, we also talked about that, saying, look, this doesn't look like it's finished. When everybody was all excited, it didn't look like it was done. We had more to go. And then we were, our whole theme then was we're going to look for the next counter trend, where it's going to finish, when it's going to end, so that can get positioned. And so, I mean, here it couldn't have been any better on the cash. We saw it coming exactly at the 50% of the square. I mean, that's really textbook. It was right around 57.81, 82. You can see it there. And once the low, the high bar got taken out, that really low, narrow day. I mean, that essentially that's what started the whole thing. Of course, we had a couple of day counter trend in between. And even on that Friday, we talked about, any counter trends that can't really hold above 56.73. We find resistance there, we're going to turn around, and that's we're going to have weaker conditions. So weaker conditions, even weaker below 56.73. And then we talked about, actually, we joked about how 55.82 on that Friday, we talked about how 55.82 is really important. And if we take that Friday's low out, we're probably going to take out this low, which we did. And eventually we tried to come back up one more time and then see what happened. Finally got to the 90 and even went a little bit lower. We're down about 135 on the cash. Interestingly, this weekend coming into Monday, we're also running about 47 days from the high. And that's normally, natural sort of a time cycle. And
And
I
that's
think
calendar days, not trading days, right?
yes, this is calendar
Hmm.
days, and also solar degrees. It lines up very close within a degree or so. So I think a lot of things are lined up, and when we go through, we'll see, what to watch for next. Um, but looking at the overall picture, these increasing gaps and the longer ranges, it just doesn't seem like we're all done for the year. Let me just put it like that. So, but let's take a look, see where we stalled and what we can expect next week. Anything you want to add to this, Ben?
No, just that 45 is a good like natural rhythm in the S&P, so we got to watch next week and
Yes,
see
yes.
what
It's
happens.
yeah, it's a very good number and happens all the time. So here's the ES. This is the futures. Pretty much the same thing, same chart. And you can see we're also down into 135. And we'll come back to this later when we get into that. Here's the continuation chart. You can also see how we had this. This is on the continuation, okay, not the front month. We had this 57.50, 57, 56.82. We had to really clear that on the counter trend in order for us to even think about moving higher, but we couldn't, failed. And on that spike, we tried to poke up in there around 57.50, and that's where we turned around and failed. So again, another failure. Coming down, I think one important level to remember is 180 degrees up from the low back in 2022. And that low happens to be 50.15. Let me type it in here for you guys. So we really want to watch that. And, my thinking now is, if we're going to get there, we had this really critical level marked earlier, back in 24 when we had that pullback in March, April, pretty much around the same time. That pullback, we were really watching this 49, 46, 49.50, this level. So when we talk about 50.15, sure, if we can get up, within a few points, let's say very close to 5,000, that would be decent support. Next level would be this 49, 46 level. Now I'm going to talk about support in the sense that I think these are levels we just need to know. When I talk about support, it doesn't mean we're not going to talk about resistance. We're not going to talk about counter trends. It's all counter trends from here, as far as I can see. So for now, write both of them down. But if I cover both of them at once, I think it's going to probably be confusing. So I'm going to talk about support levels first, and then we'll talk about possible counter trends and how that line up. All right, so that's the continuation chart. There's a couple of levels, and the Dow. Again, February when these highs came in, January, February, we talked about how bearish that was. We talked about how there was a false break here. This secondary lower high was perfect setup. I even drew in this triangle saying, look, once this triangle breaks, we go. And sometimes you get lucky, that worked out perfectly. We talked about that. And then we had the little expanding triangle that was trying to penetrate back into this zone, which, really tried to do that, couldn't get established. You can see all the closes are open, closes were down below the zone, below 43,723. And, that was pretty much, after the triangle broke to the downside and we really couldn't get back even to 44,300. I thought it was kind of written on the wall, we were ready to start moving lower. So more recently, I think the big deal here is this 41,348 level, which it doesn't necessarily have to be to the tick support resistance, but it's sort of a number that acts more like a balance point. And you can see why I say that, because you can see once we, before we got above that, we were banging up against it. We came up, banged up against for a couple of months. And once we gapped and flipped on top of it, you can see how we kind of stayed on top of it, right? You see the gap day there.
Mm-hmm. Mm-hmm.
You can see there. And it was a September, sure, but contract change and all that, but gap stayed up there, stayed above the level, got to the 50% level, really couldn't, make any headway above that. And once we took this out, now we're really flipped. This is flipped to the downside. So this is, anything below that is really negative until we somehow get on top of it. Now, when I say that, it doesn't mean we can't go further, like let's say 35,000 and find really good support and bang it out, and start trading higher. Sure, we can do that. But I'm talking about general sort of a like a balance point, like a bull bear line, just to frame this. It's an easier way to frame it. All right, so that's the Dow futures, and I know you're covering the Nasdaq, so I don't have to get into that. Now, the interesting thing about the front month is we were down exactly 144 degrees from the high and coming in at 40, 45 degrees, right, in
Mm,
time.
that's a good square.
Yeah, we could say, and 48 degrees is a division of the 100 square 144. So we have price and time right in here between now and Monday, let's say. Is that enough for a little bit of a bounce? I would say yes. It's enough to give us one. Is it enough to give us a decent low? Well, possibly. You know, that's when we get to the weeklies and everything. I think all that will be a little bit more clear. But for now, you can see how our 5740 level, that was one of the levels we were watching to see if we can hold above or below. Once we broke below that spike, um, after the cash closed, that's that little spike. It held the trend line, and the rest is history, right? We dropped 72 degrees in one shot. All right, let's take a quick look at, let's take a look at this. Again, this is the front month. It's a chart that we've been watching on and off. We were watching the March contract on this same chart. And then when June rolled around, I just used the same one, changed the symbol, kept everything, just to see how it tracks. Now, March, taken from the front month high, guess what's coming up, Ben? So we got 90 days coming out on April 10th.
Wow.
All right, so that's April 10th. And if we think about April 7th, 8th, we have that 45, 48 coming in. Then we have the 90 coming in before that. So it could be a day early. The right in here is really important because we have that 90-day run. Again, that's no pushover, right? 90-day is a big deal in Gann's work and cycle work and divisions
Sure
of
is.
that. Yeah. So do we want to keep that in mind? This is not just any old day. That's why we weren't calling any of these lows, because we really didn't have any decent cycles come in. And now we do. And sure, it took 3 months, but there it is.
And it looks like we went exceeded a little the ABC on the way down there, huh?
Yeah, we went a little over the ABCD. That's right.
Hmm.
And but I'm just wondering if we're gonna, if we do a full blown washout at 4,700, 4,700, and let's see, the 4,000, let's say 4,800, right? It's a little
It's
scary to even think about it at this point.
but it's certainly possible.
Well, I mean, that
I
would
mean, we
give
could
us
do it Monday.
at this rate, yes, for sure, right? And then have
Yeah,
something left after lunch. So
right.
it's well, we need to cover the ground, right? So if we're going to come up into a 90, certainly we have up until 10th. We could do a lot of damage in 4 days, so no question about that. But it's just something to watch. It's something that's coming up. It's not quite there yet. I mean, sure, we could hit the 135 on the 90. That would be very good also. But somehow this time period, this area is important. I'm not going to put too much weight on this because it is from the front month, and it wasn't March. This is June at the time of December, right? The time. But the more important one is the 45 time count, which is still, it's a respectable time count. And if it hits, I'm sure we'll have some kind of price, which we already do. So we have some type of support here. Now, the other support I wanted to show you guys was on the weekly. And this is the cash weekly chart. And you guys have seen it. If you're following us for a while, we had the trend lines drawn up, the geometric line, and how we came up below and sort of stalled under it. We had the ABCD that was up there before prices got there. And we were looking for that to be a good target to go along with this monthly and the weekly cycles. So long and behold, we're down 60 degrees on a weekly chart. So this is something we want to notice. The level was 50.76, and look at this, Ben, 50.74 after after huge drop like we've had this week.
Amazing,
Yeah,
amazing.
not bad, not bad. And you can see the stall was really at 55, 58. You can see that 2 weeks prior we were just kind of hanging above it, just waiting for somebody to pull the plug, looks like. And then once we took out the 55, 58, it was straight to 50.76. Now, just for fun, I thought, well, what would happen if we just duplicate that and put a parallel? And that would get us into right around 45, 46, right there.
And
And
Barry, the interesting thing in this market
mhm,
recently with the expanding volatility, we're covering half squares and full squares in no time.
yeah, in like one day.
Yeah,
So,
yeah, depending on the
yeah.
time frame, but they're
Hmm.
like the daily. I said, oh, the now that we've gotten over the half square, the target is the full square below. Boom, we hit it the next day.
Yeah, yeah,
And then we push to the next half square the next day. I
yeah.
mean, it's that kind of
I
movement
mean,
you're
on the
seeing.
way up, the same amount took almost half a year.
Yeah. Yep.
So here we do it in 1 week. This is why I was a little dizzy when you called. It's like when you were asking how it's going.
Right.
Well, it's a little speeded up, sure. Well, why is that? Well, we did about 6 months worth of movement in a week.
And
But
and
anyway,
the
huh?
and the
Yeah.
actual explanation is fear is a lot stronger motivator than greed.
Yes. And you can make a lot more money during fear times and bull markets, so a lot faster. So I love the bear markets. It's just that, you have to be on your toes, right?
Yep.
It's very, very fast. So anyway, so I duplicated that, put that at the bottom. So looking at that, let's say we were to get there sometime this month, that brings us up to around 45, 4,600, 4,600 right there. And I'm only, like I said, I'm not doing it to as a target, but I like to like sort of forward plan a little bit, even when I'm, talking to you guys, just to have it on the board so we know where those lines are. And here's the one above that. So that would get us up to about here. So that's what's below 50.76. And Ben, like you say, we did close below. Yeah, we did close a little bit below, but I think it's too close to call it. The important thing here is, look, this is 180 degrees up from the 2020 low. So I think it's kind of a big deal at 180 from that low, because that was like max fear down there, right? So
True.
from
True.
there, 180 degrees up, here we are. And so when we put all of this together, all the levels we talked about a lot of support levels in the, not a lot, just the key important ones. I'd say to keep this one in mind, basis a weekly, because if we get 2, 3 days under this and we can't get above it, well, I think this this level might be it for the level. Also remember, this is a weekly, so it doesn't, just one bar might not be enough. Might have to watch it for a little bit, just like we had
And
to do up here. Yeah.
yeah, and Barry, if we just retrace 50%, which is a normal retracement,
Hmm.
puts us at what, 4,100?
Retrace down. Yeah. Yeah. Right here. It would be around, yeah, 4,100 exactly. Yep.
And that's why we're saying, maybe it's halftime in the big
Yeah.
picture.
Yeah. Yep. And if we can get there, and in a decent time, I think that would be the healthiest thing that could probably happen. Let's see how all that works out. So that's the weekly. These are normal weekly chart we've been watching. Again, this is the futures chart. Here also, we're up 180 degrees from the 2020 low, and it just happens to be 50.96 was the closing price. And you can see it's not the same, right? It's a different market altogether. But so 50.73 is the 180 degree level. There we go, right on the board. Now you guys have a lot of info. We have the weekly levels for both. We have the daily. We have a potential price in Times Square coming up over the weekend. Well, today up until Monday, Tuesday. So all of that is there. We could chop around here a little bit, try to find some traction. We could get a little lower. It's possible. We'll see how all that works out. But now, I think the only thing I wanted to show you here was that, this is like in case if this happens. Remember, we did like a reverse ABCD using this at 22 market, and that came up to 48.21. This dotted line right there became that target, 48.21. I'll type it in there. Doesn't mean it might get there, but if it gets there in style with lots of supporting evidence, yeah, we'll take it. We'll take it. Anyway, that's all I wanted to show here. And what else? Let's take a quick look at the 30-minute chart, which I probably have to rescale over the weekend because it's getting a little out of hand. But nonetheless, starting Monday, Tuesday, we started with this 56.48 level. We were looking at this 57.01 as resistance, bumped up a couple of times, and next level up was 57.47, 57.50. Couldn't quite, get up in there other than for that new spike. And then once we reversed, took these out, it was pretty much history. Of course, we came down and stopped right at that 55.66 level. I'm not sure if the old charts had that because I'm going from the high now. Anyway, we had some support resistance around here. So this week, basically, we ran up overnight, 55.66, couldn't quite do it, couldn't hold it. Came up to 54.76, ran up to 50% of the square right there, couldn't quite hold it. So these are the key levels we're looking at, right? We always say we talk about full square, half square. The full square, half square, couldn't do it. Half square, full square, couldn't do it. Took out those lows. Full square, two full squares. And then it got a little bit volatile, right? So 5,300 couldn't really hold above, and then the rest was kind of history. Once we took out this 52.08, I think I posted this morning. This was really good support, almost as important as this 54.76 level. So once we took that out, that's why I had the little zone marker on there. And if we get stuck below that, it's going to be weak for the rest of the day. And sure enough, we got stuck below that, and we dropped all the way to the 50% square, which was 50.72. That's the one at the low. A lot of ground to cover, Ben. A lot of ground.
And it did it quickly.
Very quick, very quick. So on the bright side, we have trending markets. We don't have to complain about sideways and chop and how it's making us crazy. Now it's just the speed that's making us crazy. And, it's funny how many things we want right. We want it to move, but at a comfortable pace.
Right. Not so fast.
Not so fast, but this is what we got. So next week, like we talked about the other levels, they're all on the chart. You guys can go back and take a look at it. We really want to watch this 52.08. I think this is the really important level to watch. I think below 52.08, we can be very volatile. We can be doing some range, running around here a little bit, trying to find some traction. And one thing I tell you, what makes it easy for us is we watch these levels that I mark up there. Like this is 51.17, 51.63. once a level gets taken out on top of it, then we're basically looking for the long side into the next one. Meaning, obviously, you'll have other supporting tools to tell you that, like which way it's moving on a lower time frame or however you're trading. But basically, the way we trade is we just go from level to level. Once it gets under, we know the trend is down, like from here, 56, 55, 66, it's down. If it takes this out, well, down. And 50% levels become, basically the two levels are the ones we go off of. If it's below, we continue to trade it till it stops. So what does it mean? It stops. It means, we come down, then we trade above the level, right? So the level becomes support. And then we have other supporting indicators, fuse lines, everything else that's helping us see which way the new direction is going. And to say that, I don't normally go through, I don't have time today either, but but it would be great if you guys catch the fuse lines during the day, because pretty much every day, we get the indications pretty close to near the highs and pretty near the lows, if you post two. And once you have that fuse level, it's a really good early indication of direction. And that helps you kind of figure out how the rest of your system tracks the market.
It's like an
And
anchor for the day, it gives you an anchor.
yeah, yeah, definitely. So if you guys, and how do you know it works? Well, you guys can go back, there's years of posts on X. So you can go there and check it, or you can just check in real time. Either way, if you guys day trade, the ES or the S&P, anything. It's a really good way to get early indication that I haven't seen anything better. So there it is. That's that, right, Ben? Like, all right.
Really good. Let's put it
Hmm.
that way.
Yeah. I mean, if you trade, then you see the value because you're watching markets a little bit closer, right? Not at the end of the market or something, which still helps. But I think if you're trading, you can really see the value. All right,
It,
let's move
it,
on. Huh?
I
What's
mean,
that?
it gives you something to trade against. That's the thing.
Oh, absolutely. Yeah, yeah. Yeah, the whole point of the fuse lines are we have fuse patterns, which is all on X. It's the pinned message on plus three forecasting. You go
Mhm.
and look, it'll show you some patterns that we look for to help us sort of get the direction early on. And lately, you don't even have to wait for the pattern markers. It's so fast, it'll tap the number and then boom, run the other way. So yeah, it's a good anchor. All right, you're going to cover the Nasdaq, and I'm going to move on to bonds and
Big
crude oil.
developments in bonds.
Oh my
Big
God,
development in
yep,
bonds.
and crude and all the markets. And if you guys
Hmm.
like our work, just a reminder to click the likes, subscribe, and maybe click on the alerts so you know as soon as we publish, and also to share. Other traders that might benefit. Bonds. We were talking about birds on a wire. We saw how it tried to break below, but then it broke up last week, and we were waiting sort of on a holding pattern. And I was saying, look, it's making lower lows and lower highs. We really don't have it. We need some kind of indication. Well, sure enough, we started trading higher right up into the 50% level, which was our next stop. When this high was working its way to the ABCD, we talked about, if it blows through the 19 and a half, it's going to go to 22. And sure enough, we came up and tapped 22 today. And what do we do now? I think above 119.16, the market is, if we stabilize up here, you can see there's a really nice sort of a table here. If we can stabilize over 1916, bonds might have a little bit more to go. I'll do a little bit more in-depth work next week on bonds and a couple of other markets too, because this week, as you know, I was too busy to get anything done research-wise for bonds and a couple of the markets that we don't day trade. Anyway, that's it for bonds. You have anything to add there, Ben?
Level is good. Mine is 119.18 on a weekly full square. So
Oh, it's right there. Okay.
yeah, as long as we're above that, it's bullish.
Right. And I think the only other thing is the 50% square, which
Hmm.
has worked like crazy because he worked here back in October and he worked in December. So I'm thinking, we kind of did a false break against these highs, but it's not true false break like a high, like a um, high of a segment. So I'm kind of watching it. But I think 1916 is the key, like your 1918 you have. If it's above that, yeah, I think we have to see how much further up. Because the next level is really after if we take this 50% out, then it's 124. Yeah, we'll see how that works out. In the meantime, we're also getting down to about we're basically trapped between 119.16, 119 and a half, and 22. And look at a weekly. So weekly, look, it's it's the daily was kind of showing us pointing the way, right? We're starting to take out the 144, starting to move a little higher, and we didn't quite finish the ABCD down, which we always talk about, how that's a kind of a sign. And the only way really that it's a sign is, once this gets taken out, right? ABC gets taken out, then well, we're not going back down. It's a whole other pattern altogether. But we were looking for resistance at 144, and now we're starting to push above. Like I said, the 122 is the next level if we can manage to be above 119. So let's continue to watch that. In the big picture, we're still sort of consolidating between this is really a consolidation picture, right? In the big picture, and we're trying to figure out. We went from one boundary, and now we're moving to the other boundary, and the top of that boundary seems like around 123, 124, and that's where, and we get that same number again on the daily charts, and that happens to be 1 square and 7/8, so that could be really good resistance basis the weekly. And it would give us another kiss on the break of this line. We had one here and we sold off. Possible we go up here and sell off again. So we'll see what happens. I think bonds are we're in for a ride. So let's trade it carefully is what I can say. Let's see what else. All right, let's go on to crude. Well, finally, we get our wish.
Yeah.
So we've been talking about, how great it would be if we can get some kind of a flush below 61.61. You guys have been watching this for months and months. We've been waiting for that. And well, we got it. So I think we're closer now than ever to having this flush, which might be the last lows we see in oil crude for a while. And the reason we say that is not because of geopolitics or the whatever else that's happening. It's just because of the weekly cycles and monthly cycles. They are they're all very lined up, ready to move, and this was like the first sign we were waiting for. So, and we got it, right, Ben? So that's that. Let's take a look at here's a weekly crude. Again, we broke through the 50% of the level, and we got the false break we were looking for, got the flush we were looking for. We got below the zone. So finally, right? So we'll be watching this very closely now. Sure, it could go a little lower. It doesn't really matter. We really wanted to see how we get there. And the reason for all that, first we thought it might come up to here and kind of follow the curve, but I guess it was just out of time. And now the whole point is we're doing some kind of a false break, and a huge leg like this should finish with some kind of a false move. So we'll patiently wait for the rest of it to stack up. I think the early indications are already in. I think this is the part we wanted to see, and rest of it we'll wait day by day and pick it up. Anything you want to add to Crude?
I'm going to show my monthly circle chart. So
Oh, great. Okay.
Take a look at that update.
And let's move on to gold. Gold didn't quite get to 180, didn't quite get to 90 either, but we didn't hold the 50% level. But I feel like entirely gold is still got plenty of room. I think, we always talk about a deeper correction would just be fine with gold. And I mean, that hasn't changed. I think 2,900 coming, even a correction down to 2,900 would be just fine. Gold is still very bullish. We wanted that. I think we had a couple of small squares that came up. We want it to sort of finish up the balancing of price and time and continue the trend.
Hey, Barry, I got a good daily square for you on gold.
On the daily?
Yeah, go from the
daily, right?
December
Okay,
20 low.
So you mean from this low?
Yeah,
Yeah, this is
exactly.
72
From
by
that spot.
144. Nice correction back to the 50% line, 108 degrees.
Hmm.
Let's see. I mean, it definitely squared out here. So there's some other resistance. We saw the weekly come in a couple of weeks ago or a week ago, right? Um, yeah, let's see. And we talked about how he went down to 2,900. It's in very good shape. So I think a little pullback is just probably in order.
Yep.
And here's the weekly, and we're going off of the 2022 low. And we tried to get above and hold about the 50% of the square, not quite making it. And that level is 3,066. We're $10 below that closing. And I would say, like you said, let's just let it correct and see what happens. So 2974 looks like this little consolidation there. So 2,900 will bring us pretty much to the 1/3 of the square,
Hmm.
which would work out just fine, even if it gets there. Look at the gap here. So we're in pretty good shape. All right, so that's gold. Let's look at some of the other metals. Silver really took a kick, hey, after the
Crazy, crazy
after
today.
the eclipse and everything in March. That was
I
it.
mean, if you look at that square, it's just been ping-ponging between the top and the bottom of the square.
Yeah, now it's just doing it at a much faster rate now. Just,
Faster.
so I guess we're back to watching the 32 because that seems like the key level now.
Yep.
And the fact that if we can hold above the 180, it's funny how this is pulling everything, a lot of these things back to 180s.
It is
Um,
interesting.
right? So here's $28. If we can hold above that, I think silver's in great shape.
Hmm.
Otherwise, probably let the consolidation or the correction work itself out. Looking at the copper, well, all the metal kind of got
Monster
spooked.
move. Yeah.
Yeah, yep. Copper really couldn't hold above, didn't quite get the 50% level. I mean, that's like the first sign, right? When something can't quite get there. And then it really can't hold above the quarter. And then we said, well, it's kind of bullish as long as we can hold above the 60-degree level, which is really true. I mean, that's really the case. And that's right around 494, 495. And once you lost that, well, 50% would have been a good place to stop normally, right?
Hmm.
447. But force is the force, right? And we just blew through everything.
And
And yeah, go ahead.
yeah, remember last week we were talking about there were some good squares, like a daily was 225 by 360.
Mm,
We on the monthly we did 108 by 108 from the 2016 lows. So, I mean, those are
that's
those are
right.
big squares, and we got the reaction.
That's right. That's right. That was a good cover too. I remember that. And now it just looks like, I mean, 423 is really the way. We'll see how it does there. And that would bring
Hmm.
us into pretty decent structural support, not just here, but all the way back to 2023. We had some of these old highs.
Sure.
So that looks like proper place, unless everything's going to hell in a handbasket. We should probably hold in here somewhere and try to get back up to 50% level, which would be around, 447, 448. If we can get
I
up
also
in
th I
here.
also think
Mhm.
Barry we had high to high 216.
Did we have that? Okay.
Yep. I
High to
think
high.
that's
Okay.
yeah, high to high.
On the daily, right?
I think
Mm,
it's the daily. It might have been the weekly, but check it and see.
How do you think I can get this done? Hold on. Yeah, well, you have 220.
Yeah, it's right in there.
220, 225.
Hmm.
Anyway, we have a little bit more to go, and we know where the 50% level is. And really, until we can get above this 4.5, 447, I don't think we're going to build up any momentum. And the bottom end of that range would have to be a little bit above the ABCD. And we'll have to see how it happens. 423 is the next level. We'll see how it plays out. But yeah, for now, once we lost the 60-degree, we're pretty much free fall zone here. Well, the 216 we had was this square last week, right? Not the square,
Hmm.
but the level on the
Hmm.
weekly. We had went up to 216. We tapped it. So that's pretty good resistance. And well, 480 was the 50%. Really couldn't hold about that. So it looks like we're going down for the count. So 144 would be right around 423. How about that? So I think that's really the level to watch. And if we can hold above that, great. But I think, if we break below this, I think we're going to have some kind of a problem. There's a problem somewhere if we can't really hold above that. So
Right.
we'll see what happens. That's that. What do we have left? Let's take a look at the dollar. Dollar took a little bit of a break. Couldn't really hold at the 50% level, tried to do it, just holding, but then, Thursday, Wednesday, we started to break down. And, there's a little triangle there intraday, but once that break happened, then that was it. And today we kind of maintained it. Didn't really come to any, but I did want to show you guys this. There you go. I think we looked at it last time. So we were talking about a 60 by 60 saying, well, we could go higher, but this is definitely an option. The deal here is we definitely blew through the 60 by a bit, but not too much. We came to 7/8. And anyway, we're 60 in time, and the dollar does work with the 60 in time. But that is a good cycle. So maybe that might be it. 7/8 level could have been the next, how we push a little bit more, and then usually 7/8 becomes that level. So 101.70 is that level. And after the time cycle kicks in next week, we can hold above that, then that might be it for now. We might get a little bit of a bounce off of that. So we'll watch that. Looking at the weekly, we also came hard and fast down to the 50% level. And we talked about that 50%. Like if we break all this, we're going to come down here and test it. And it looked like we broke it with some force, poked a little below, but, managed to close it quite a bit higher. And let's see if that low holds. I mean, I think the area is okay. It is a 50% level, and you can see the dollar has a tendency to poke a little below that. This is for the range. And so it's not for exact tick for tick support resistance, but it's good to get an overall frame, what the market's doing. You can see here, we were generally above the 50% level. So this looks like we're there. And if that 60 by 60 works out, then we can expect some kind of a run back up, I would think. Anything you want to add to that?
And look at how we came right into the timing there.
Perfect, right?
Mm-hmm.
So far, so good, like they say. And I don't know if you remember this 1150 that I had written, had up there, but boy, if that's not the target we went up to on this run. So to me, that looks like that's also like overrunning the 90 by a little bit, just like how the dollar kind of overran the 60. And because we came right back, couldn't really hang out and put in the air above that level. So let's watch it. Like I said, the 108 is really the level that sort of plays like an equilibrium line. So we'll watch that. 109 is the other level above that. So it's 0940. Want to see if we can hold above that or not. If we lose that, there's a good chance that this was kind of a overblown shot. And as long as we're below 90, and what is that level? Let's say it's 1060. As long as we're below 1060, it'll tell us that this high came in. It's a 90, so that's resistance. 1060 would tell us that the resistance in place. And if we take this 0940 out, looks like we're heading out to 108. So that's kind of how I'm looking at it, step by step. Given that the dollar did come into time, and so did the euro. And I'm looking at this as kind of some kind of a temporary high, or maybe a high for this leg, because of the timing that came in and the price, right? And the fact that we blew it through a little bit, it's sort of what currencies do anyway. So kind of to be expected, I guess. So basis the weekly, this 109.50 level I've had on the books for a while, and you can see why, because for years it's been working great as sort of a buffer. It's really between that and the 90-degree level coming off the 22 low. And so we've been in that 50%, top 50% of the square most of the time. Now we're at the upper band of it, upper range of it. And the fact that we couldn't quite get to 90, we might, if we get there next week or week after, we'll have to work with that at that point. And so until that happens, we have to treat as if that 90 that we saw on the daily finished up something. And here, long as we're sort of below this 109.50 basis, the weekly, I'm going to treat as if that high actually hit resistance and we're kind of doing something else. All right. Does that make sense?
It does. That 108 level on the euro is very, very strong attractor.
Mm-hmm. And it's really the next thing is really what happens once we get here next time, right? If we get here, bounce
Hmm.
off, and are we going to go higher or are we going to break through here? But that's really the question. But for now, we're dealing with this. And the way I deal with that is I watch the 90 and then the next level. Between those two, you can see if we're going to make lower lows, lower highs, or we're going to make higher highs and higher lows coming out of it. And are you looking at natural gas this week?
Is just trying to figure out if it's going to hold support or not.
So the Hang Seng, it's pretty resilient. I think even with all the news and everything else, they held the level 22,000. Let's say 710 for practical purposes. We kind of held that level. We have good structural support there. And I'll tell you what, though, if we hold it here and manage to get above again, I think then we can do another full square. So we have room to run. It's just a matter of how we correct here. And this correction is not bad. It's exactly right about 50% of a square. So we should find support here, which means we're probably going to rally. When we rally, the next question obviously is this 24,000 level, if we can get above that. So for now, we're looking at that. Of course, if we slip through 22,710, then, then we have this 50% level to deal with, which is 21,000, what is it? 21,550. So that's kind of how that's set up. But it's incredible how the Hang Seng held up, right? All right, moving on to natural gas. Well, we ran the square, came up to 90 with this, which is resistance because we're coming off the high with this square. It doesn't look weak, but it definitely looked pumped. And I think a lot of the natural gas stocks are doing fine. None of them are getting killed. So natural gas looks like it found its place. Lows seem to be in place. So let's just watch it and trade it. Well, that's all I got, Ben. Let me put it back to you. We'll cover Bitcoin, Nasdaq, and everything else. And we thought, the joke about 18,000 was funny last week, but
Well, and remember we talked about it. We said, listen, if we can't stay above 19,925,
absolutely, yeah,
we're heading down.
yep,
And I mean, look how well this works, right? We came down, didn't
mm-hmm,
get stay under, pushed up, failed, came down, first full bar under, boom, takes us right down to here, and
mm-hmm,
then we're down to here, and now we're even below there.
yeah, maybe down to
So
17
next
before you
week,
know it.
yeah,
So,
17,750, call it. We better get
mm-hmm,
above that, or we're heading to 17,000. And you can see 17,000 down in here. You have some support
yeah,
from,
yeah,
August, April,
mm-hmm,
January of last year.
right,
I mean, basically, we wiped out a year's worth of price action
sure did.
if you look at it
Mm-hmm,
in what, 2 months?
yep, not bad.
Take right, you take the stairs up and the elevator down. That's for
Yeah,
sure.
boy,
So
and
next
nobody's
week,
making fun of the Bears all of a sudden.
no, no, no. And listen, we don't want to be bears.
We're not
We put
Bears.
the hat on that makes sense.
Mm-hmm, yep,
And this hat has made sense since all this happened. And you can go back and listen to the old shows. We kept saying, especially Nasdaq, which had led, could not
mm,
make a new high.
right,
We had this lower high and then boom.
yeah,
So it's not surprising. What's surprising is the speed with which it's done it, but
mm,
it's not surprising that we're down here.
right.
Let's take a look at the weekly.
Wow, look at
Now,
that.
the weekly is interesting, right? We've crisscrossed. We were talking about, oh, we could make it all the way down to 18,000. Well, So now we've crisscrossed here. So next week, it's really, really important to see if
Mm-hmm.
we can get above 18,200. If
Absolutely.
we get stuck here on any bounce, in this 18.1 to 18.2 area, look out.
Mm-hmm. Yeah.
It's going to get ugly. If we sit on top, then we can, burn off time, maybe get some sort of rally. You're going to have resistance here at the previous lows. So that's around 19.1.
Mm-hmm.
So the key level next week on a weekly basis is this 18,186. Got to get above that if you want to have any chance of putting together a rally.
Right.
Let's take a look at the monthly.
Oh boy.
Same story on the monthly, except it's
Mm-hmm.
18.2. So let's call it a range, 18,000 to 18.2, 18,250. Really got to get above. Because remember, big cycles came in, half square is probably not going to do it,
Mm.
but we'll see. We shall see. Anything you want to add here on NQs? Oh, let me show the calendar because this one was really nice. Remember this? We made the high, got
Mm-hmm.
got stuck under here, and we kept talking about it. Then we poked above, and then we came straight down, rallied up, and now look where we are. We're down
Right.
below the half square here. I mean, I didn't write that number, and this one is, let's see, what is that?
30.
17,732,
Yeah.
let's call it. Yeah, let's put that in there.
It's funny in all these Nasdaq charts, the price shot one eighth into the next square. I just
Interesting.
noticed. Yeah.
It's that, oh, that's what you always say about the ES, right? It always pushes it a little further, so you got to give it that extra eighth before you call
Mm-hmm.
it.
Yep.
And maybe it's doing the same here. Yeah, here's your eighth at the top. Here's
Yep.
your eighth at the low. Yeah.
Mm-hmm.
But again, it wasn't rocket science that brought us to the conclusion. It was price action, it was the cycles, it was, how we just weren't making any headway.
Mm-hmm.
And then of course the match got lit and the
And the
rest is
smart money
history.
was out between December and February.
And you know what I was thinking about the other day, and I'll share this. I
Mm-hmm.
was like, Trump got elected and there was all this euphoria, and then there was all this sideways. And I kept
Mm-hmm.
thinking, we kept talking about, oh, this looks like distribution. Oh, this
Mm-hmm.
looks like distribution. This must be all the connected people who knew what his plans were, right?
Yeah.
What he was going to be doing, what the administration was going to be focused on, because this is all during the transition, right? All the way up
Mm-hmm.
until what, January 20th, when he got inaugurated right here.
Mm-hmm.
So this is all transition.
Yeah. And the people watching our show, of course.
There you go. There you go.
But yeah, I mean, it looks
All
very
right.
obvious now,
Anything else
right?
you
When you
want to
look
add?
back. Well, I mean, it looks
Yeah.
that
Yep.
and given that kind of distribution, now we can see like, well, this is not a big surprise. You could expect some kind of a correction, big
Yep.
correction.
Big
So yeah.
correction. Yeah.
All right.
Um,
No, it's good.
anything
Very good.
else you want to add on NQs?
Well, not much. I mean, I think, when the whole lot of the problems are when the market is not moving. I mean, when it's going in direction, it's kind of easy. You just take it level by level and you do the counts. And like we talked about, we have that 145 count in the indices. And if it doesn't have
Mhm.
any traction early next week, then I guess we have another level to go. And
And I
Nasdaq's
see
not
there's
immune to
there's
that.
roughly a 45 here too,
Yeah,
right?
yeah, I think they all got it.
You got about the 45 there as well.
Hmm.
So
Hmm.
we'll see if it can engender a bounce.
Yeah.
Let's look at Bitcoin now. Bitcoin, I was surprised this week. It wasn't really weak. Basically went sideways this week.
Hmm.
With the carnage we saw elsewhere, you'd have thought this thing would have come down into this little target zone.
Hmm. Hmm.
But it was really more of a sideways week, right? We started the week here, popped up a little bit, and then pulled right back. But we did close under that 85 280.
Right.
But
Plus,
I thought
yeah.
this was an interesting thing that it wasn't super weak.
I was gonna say I wouldn't take that target away because it's doing some kind of a triangle here. And if that triangle breaks at the downside, we're definitely going to that target. So
Hmm.
right there, yeah. When that
Yeah, I see.
breaks. So
Let's draw it in so everyone
yeah,
else
let's
can
go
see
ahead.
it.
Hmm. And that's not going to break to the upside. I mean, it's going to be it's a rare case.
Right.
It could, but oh boy, I don't, the odds are it's down
And
first. So
look where the apex is, Barry.
right there,
Yep.
right there.
Right on our full square. So there's your key number.
Yep,
The weekly is stuck. This is the definition of stuck under, right? You come through, you
for
come
sure.
back, and you cannot get above.
Hmm.
So until we get above this 89.5 level, weekly basis, we're vulnerable. We'll
Hmm.
be pushing down to 71.
Right.
And this
And
is
now
like
that
the
triangle makes a little sense, right?
yeah,
Between that and this.
yeah. And this is the essence of the squares, right? When you stay on top of it, it's bullish, right? And you
Hmm.
push up. When you get stuck below, you push down, and it couldn't hold here, so we went down. Now it's testing. 3 weeks in a row, the highs are, just under this 89.5. And
Hmm.
until we get above that 89.5, which is a key level, 144, we're vulnerable down to 71. Let's look at the monthly with the circle. Let me pull that over a little bit.
Well, ever
Here
since you
it's
showed that circle,
93.
we've been tapping on those lows every month. So
It's interesting, isn't it? And that
yeah,
I've
yeah.
and I know you've noticed it too on the circles. You get that it's an attractor, right? It wants to pull it back in and pull it back in.
Hmm.
And the bulls have been resisting, but it's still coming back and tapping. If we tap this month, guess where we're going to be?
74.
In the 73, 74
Hmm.
area. So let's see. Let's see what's happening there. Anything you want to add on Bitcoin?
No, I mean that's good. Other than, well, we got the high and
Yeah.
the false break high that came up in January. Other than that, I think that triangle we should be watching very carefully. I think that's going to tell us a lot. And if you're going to, finish something up in this round, no,
Yeah. It might
yeah,
come
yeah,
into that target box.
yeah, good.
So let's talk about commodities. There was a lot of liquidation in commodities, and I
Hmm.
think, it had to do with people raising cash. They sell whatever they can, and
Hmm.
commodities were not immune to the selling. There's a lot of selling in the grains, a lot of selling in the softs. The metals, Barry showed, copper, gold, and silver all got sold. Crude got sold. So the setup I've got to show you is one we've talked about before, which is coffee.
Hmm.
We'll look at the short setup there. We had a break there where I think it's ready to start moving again. And then we're going to show you the circles on two monthlies, gold and crude. I think those are interesting to take a look at. So here's coffee. Now
Hmm.
this is kind of an interesting spot. We had this move here. We caught part of this downdraft, and then we realized, hey, we're in a triangle. Get the hell out of your options because you're just going to get crushed on time. Made a little money on them, but not didn't get the huge move. So when you and I were talking, we said, listen, we got to stay on top of this and watch this because when this breaks this, we should see some movement. Well, today we had a big move down out of the triangle, but and there's almost always a but, right? You have to mitigate certain things.
Hmm.
We held this full square.
Yeah,
So next week, what I want to watch is on any bounce, do we stay? Can we not get back into the triangle? Because if we get back in, that means we're still going to be chopping around. But if we can't get back into the triangle and we start pulling back, then to me it says we're going to take this out
yeah. And if we
because we
take
are
that out, there's a little ways to
that
go.
then we go. Yeah, you can get down to 320 here. That could be the next spot. I mean, we do have this trend line here, but let's see. The momentum coming out of this should be pretty good.
Hmm.
If we take high to low here, it's about 5/8, right? And if we
Yeah.
call the break right here, take one
Hmm.
eighth, that puts us down to 320 in that area, which where there is natural support there along with
Right.
the half square.
Hmm.
So I want to watch this really closely. If we either take 366 out right away or can't get back into that triangle, it's going to be time to hit the coffee shorts again. Let's take a look at the weekly. So we got a lower low, right? We reversed. We were triangulating in here. You can see this mess on the weekly. We reversed hard today, took out the low, and And the other one we said it was what, 366. Here it's around 358, 360. Again, take that out, you go down into the 330s. That's the weekly. Here's your monthly. So on the monthly, after the inside bar last month, we've already
Hmm.
taken out the low this month of the inside bar as well as the low of the high bar. So we have a monthly reversal right now,
Right.
which is
And we're just starting the month.
that's right. So we could really get some monthly momentum to start kicking in, pushing us down towards this half square, which is 343. So I think the setup is good now. We were a little early here. We caught this fast move down, but I think now we're out of this mess, and we'll see what happens early next week. Sunday night into Monday morning. What kind of move we get right away, having broken out of the triangle and made a new low. Anything you want to add here on coffee?
Looks like I mean we're making lower lows and lower highs. So so far it's moving in the right direction.
Yeah, and we've got that roll here, that we start to see when momentum kicks in
Hmm.
because the series of lower highs.
Right.
So let's see. Let's see what happens next week. I'm
Hmm.
very curious on this one. All right, let's check the next chart. I wanted to show the gold here because of where this is the monthly. We talked about this circle when we were stuck here for 3, 4 months, and then once we broke out, we shot up and made the move up to the 180 here, the full square at 180.
Hmm.
Looks like we got stopped.
Right.
We made a high last month there, made a little bit of a higher high, and we pulled back right away. So while it's early in the month, if gold can't get above 350 and then we start printing bars underneath, that means, we're stuck under monthly basis.
Hmm.
So this bears watching. Let's jump over to the other one I wanted to show. This one's really interesting. This is the crude one.
Oh boy.
Remember, we've been watching this circle for a while, and we
Hmm.
said the key on this circle is if we get stuck under the full square, we could get an acceleration to the downside as the prices begin to follow the curve. Well, look what happened last month. That's the March bar, right?
Hmm.
We closed right, practically right on the full square. This
Right.
month we poked above and then we shot down.
Hmm.
So we're working on an outside reversal bar, right? If we close the month, it's early, but if we close the month below 65, that's an outside reversal on a monthly basis. That's no small thing.
Nope.
And you throw in the geometry here, and you throw in, the square geometry, you throw in the circle geometry. This thing could accelerate.
Hmm.
I don't know what that would mean, from the global economy or the supply of oil or what, but that would be massive in terms of moving down sharply
Hmm.
if we get stuck here. Now, the other side of it is the bullish side we have to think about is if we break up and above and out of this circle, oftentimes when these circles break, like here, see this strong uptrend going up, we break out of the circle and down we go. This would be the opposite. We've been coming down in a downtrend for a year and a half. We break up out of this circle, talking about $100 next stop.
Mm.
So this has the potential for some explosive moves either way. Either way. And I know you work a lot with the circles, Barry. Anything else you want to comment on this circle here?
Well, I think it's a good thing to watch. Let's see how it pans out, and we don't have too many more bars to go. You
No.
know, the thing is, if we reverse immediately, like we're kind of expecting that could happen, which and then I think because of the curvature, we could have a quick snapback the other side. So
Yeah. Yep. Because
meaning towards 101, that square line. That would be
absolutely when we break out of these squares, it's a
Hmm.
lot of energy in the opposite direction.
Hmm.
So that is something we have to watch. That's it for me.
Hmm.
Um, we're running out of time, so I don't think we're going to have an end of the week topic. We hope everybody has been benefiting from the things that we've, the information and the research that we're putting out and the analysis. The comments are great. Please, make comments, subscribe if you're not already a subscriber. Hit the alerts and help us grow the channel. We really appreciate that. The volatility, we've been saying it every week and we'll continue to say it as long as it's true. The volatility is not going anywhere. I mean, we think the next 2 to 3 months should be really, really volatile. So,
Hmm.
as always, rest up, do your work beforehand, know the important levels, and then you can be prepared to act because you have to be quick in this market. And if you
Yeah.
miss a trade, let it go because there'll be another one, right? It's
Yeah.
so volatile, there'll be another setup. Don't chase because chasing in this market is just a death sentence. So,
Yeah.
good job on the show this week, Barry. I love the work on the S&P and the ES and the way you have that dialed in. I think the levels we have are really a good edge to use. So
Hmm.
we'll talk to you soon. Have a great weekend, everybody, and we'll talk to you next week.
Thanks, man. Good job. And we'll see you guys next week. Have a great week.
All right, take
All
care,
right.
everybody.
Bye bye.
Bye bye.